So what I want to talk about today is looking forward to next year. And not just next year. These aren't about predictions. This is more about looking at the current daily chart directional biases and making some determinations about which trades are in, or which trades you actually might want to take on different time frames. And that will be predicated by whether or not the daily chart is trending. You might even determine that you don't want to trade certain pairs because of a lack of clarity, or that you might drive down to the very smallest, for me anyway, 5-minute time frame and utilize a more day trading, what I call the between the greens entry style. So that's all going to come from the daily chart. So what I want to do here is go through the pairs that I trade, go through the pairs that I think that are offering some of the better opportunities right now, weeding out those that I think are a mess, politely put, and we'll just kind of use this going into 2012. But remember, we always make reevaluations based upon what that daily chart is telling us. So with that in mind, let's go ahead and look at the chart that's in front of you right now, which is the Euro US dollar. And you'll notice, hopefully right off the bat here, that when we look at the Euro US dollar, that 34 EMA wave is moving down lower at what we'd call a 4 to 6 o'clock angle. That means that we have the bearishness dominating, which is culminated into a downtrend, which is culminated into the action. That's what this is going to help us identify. What is the action that is occurring on rallies? They're being sold into, aren't they? Here's what's interesting about a clear bearish directional bias. With a clear bearish directional bias, what you have most likely is the culmination of usually lower highs as well as lower lows. Now, the lower highs are the backbone of the downtrend. That's the backbone, the lower highs, the selling pressure. The lower lows help keep the bearish momentum and sentiment alive. So what we'll find typically in a downtrend is that if and when we do correct, people will position themselves, people will sell into that rally. They'll position themselves with the rally at resistance because the overall psychology is still very much one of expecting lower lows or at least lower highs. So on a rally, on the longer term time frames, using the daily chart, what we want to remember is that it's best to trend follow. But what if you say to yourself, this is a very healthy bounce? And it is a pretty sizable bounce. We've moved from, I believe it's just below 3,000 at 29.44. We peaked here most recently at about 3,026, I believe it is, and actually maybe even a little bit higher than that. It has to be higher than that. Let's expand this a little bit. We peaked at, looks like 31.97. So this was a move from 29.44 to 31.97, almost 3,200. That's a pretty good bounce, right? But here it doesn't look like much, does it, on the daily chart? If we shift our viewpoint of this pair to short term, and I define short term as the 30-minute chart, as the 15, and as the 5. If you switch your viewpoint, you'll see that there was quite a bit of bullishness for some time during that move. There we go, 30, 15, okay, and there's the 5. Okay, so we could capitalize on that move higher that we see the bounce on the daily would capitalize on that if we wanted to get long this pair on shorter term time frames. So what's the rule of thumb? If there is a trend on the daily time frame, what I want to do is make sure that on longer term time frames, 60, 240, and of course the daily, I follow that trend. I trade with it. I'm a trend follower. If I do want to take advantage of corrections, if I want to trade counter trend, then I'll go ahead and I will look at the short-term time frames, the 5, the 15, and the 30, because in essence, I don't want to position myself in a counter trend trade expecting longer-term organization of sentiment and momentum to be bullish when the overall dominant psychology is bearish. Let's move on to another pair. Let's go to basically what is the antithesis of this pair, and that would be the Swissy. So here is the US dollar Swiss franc moving up higher. The angle of the 34 EMA wave isn't the steepest I've ever seen, but it qualifies to enough to be an uptrend, kind of a shallow 2 o'clock uptrend. But certainly the momentum and the sentiment, you can see here with the green grab candles, is pointing to a bullish market. Now, even though we don't have a lot of overwhelming strength in the trend, there has been support at the wave on pullbacks and a consistency in the green grab candles. And because of that, I will look to get long on pullbacks, generally speaking. On the longer term time frames, I also want to make sure that I'm only looking at buying opportunities, because again, longer term time frames, if there is a daily chart directional bias, you want to follow that trend. You don't want to position yourself counter trend. Now there are opportunities for counter trend, but where will we look? We'll look to the 5, we'll look to the 15, we'll look to the 30. Now the 30, 15, and 5 might, as always, also might as well be, in this case, back here, trend following too. We have the 12 to 2. It's not that we won't trade with the trend in a short-term time frame. Of course we will. In fact, if there is a directional bias that's clear, this isn't strong, but it's clear, I can trade with the trend across any time frame. I only want to trade counter trend short term. So the daily chart here is definitely going to give us insight into which time frames we might want to focus on and which direction we'll be trading them. Let's move on to another pair. Dollar yen. Again, start with that daily chart. And what the daily chart will tell you, of course, again, it will define what the dominant psychology or directional bias, as I call it, is. If you do have a dominant psychology, then you know which types of entries, long or short, you will execute on different time frames. And you'll understand whether or not they are trend following or counter trend. Take a look at the dollar yen. Here we're dealing with, for the first time, as we look at the pairs, a market that really does not have a 12 to 2 or 4 to 6 o'clock angle. It's clinging to a bit of bullishness, right? So if this is a market without a trend, I would not look at this wave and qualify it as a 12 to 2 o'clock uptrend. I will say that while the trend is more sideways, we're favoring the bullish side of the range, obviously with the green grab candles. So what do I do in a situation where there is no dominant psychology, where there is no directional bias, bullish or bearish? Instead, we have the sideways market. One choice would be to do nothing with this pair. say to yourself, okay, this pair has at best a slight bullish psychology, but really no dominant trend. So when there's no dominant trend, no dominant psychology, to me it's more difficult to pinpoint what the reaction of the market's going to be on rallies and on sell-offs. Now, there will be price movement, of course. So rather than, and here's the other choice, so rather than doing nothing with this pair because of the lack of directional bias, and by the way, I do feel, in my opinion, that when there is a directional bias, when we have a clear look at bullishness or bearishness, I do feel that it is more clear, and therefore I hate to use the word easy, but I think there's more clarity in how I'll determine which way to trade long or short and which strategies I'll use. So let's use the word clear, because that probably is better. Nothing about trading is easy, obviously, but it's definitely more clear. And the clarity does add to, I think, obviously an easier trading day. So here my choices are to go short term. So when I have a lack of directional bias on that daily chart, no bullish, no bearishness in terms of the trend, in other words, no 12 to 2 or 4 to 6 o'clock angle, I'll usually say I'm going to retreat to the 5-minute chart, maybe even the 15, maybe even the 30. But again, I'll go to the short-term time frames, not because I'm trading counter trend in the way that we spoke about earlier with trending markets, but in that there is no clarity, there is no dominant psychology, and therefore what typically happens is that the market will exhaust near the range extremes. And again, I don't want to be in a position to demand of my trade that there be follow through above this level, because again, it's likely to exhaust. So short-term time frames, 5, 15, 30, will allow me to adapt to that. And I also want to keep in mind, when I am near the range highs, just keep that in mind. If I'm near the range highs on the daily, or the range lows, whatever the range extremes are for this sideways movement, I'll almost always go to a 5-minute chart. Okay, so again, these are just guidelines, but notice they're all being driven by what we're seeing on the daily time frame. Let's go to another pair. How about the cable? And again, at the same time, we're also getting a look at the psychology of these pairs as the year is winding down. So let's head on over to the cable here. And on the cable, what do we have? Daily chart. Let's head on over there. Another market where here, this is an interesting look, because what we have here was a very ugly looking 4 to 6, but the red grab candles definitely confirmed the bearish sentiment and momentum. Most recently, we've gone neutral, and this is a shift in psychology. The shift in the grab candles, here we have the blue grab candles, we've broken the wave, so there's definitely a shift or a transition going on here. And when this happens, same thing, I lack clarity, don't I? Again, another chart, just like the dollar yen, where we're lacking clarity. And if we're lacking clarity, what do you then want to do? It's best then, instead of going to, say, the 240 or the 1 hour, I feel it's best to go short term, like a 5, a 15, or a 30. Now, when there is a lack of clarity, it's not that, unlike the trending markets where I'll rule out longer term counter trend, there is no counter trend here, right? Because we've gone neutral. So it doesn't mean the 1 hour and 4 hour are necessarily off the table. There might be opportunities on these time frames. You can keep them in mind. Again, we're not dealing with a daily chart that has no directional bias. We're dealing with a transitional market here that has more of a neutral. Let me say that again. We're dealing with a market that has no directional bias in terms of a trend, so there is no counter trend entry, and that would open up all the time frames, but still I prefer to go shorter term in this situation as well, because the psychology is shifting.